Hi everyone, welcome to the CA classroom. Today we will be discussing the concept of independent branches and foreign branches, a part of the branch accounting chapter. Now, what is an independent branch? There is a head office and there is a branch. The branch operates independently from the head office, meaning it will have its own purchases, it will have its own sales, it will be financially independent in most cases, and end of every year or every month based on a time, they will send accounts to the head office and head office will consolidate that on a yearly basis. Now, how do we account for this? Let us take a small example to understand how the mechanism of consolidation works between head office and branch. Let us say you are staying in one part of the city and you want to shift to the other part of the city. What is the thing you do? First, you pack all your assets in your house, all your furniture, your clothes, everything you will pack them into boxes and then you will put them in a truck. The truck will then go to your new house. So, what is the first thing you do? I pack all your boxes and you load them into your truck. The truck will go to your new house and then unload all your luggage in the new house. In a similar way, between a branch and head office, when I am sending books of accounts from branch to my head office, I have to first load my all the accounts into a common account for ease, simplicity's sake. You can take each of the assets individually also and go to your new house. But what is the easiest way? To load them into a truck. Similarly, the branch will group all their assets and liabilities, all the books of accounts, into a single account. This account will be sent to the head office and head office will unload these books of accounts into their books of accounts. Now let us see how this works. So in the previous section, we had seen on an overall basis how accounts are sent from the branch to head office. So we have three parts to accounting. First part is where I account in my books of branch. I account in the books of branch. To put in easy example terms, I have to load all my assets and liabilities at the branch into a common account to send it to my head office. That is my first part of accounting. The second part is at my head office, I have to unload all the assets and liabilities belonging to the branch and simultaneously determine the profit of the branch at the head office. The third part are any adjustments which you have to do for the above. So let us first discuss part 1, then part 2 and then move on to part 3. Now, in the previous section, we had seen that accounting involves three parts. Let us first see what is part 1. Now, you would have seen in stock and debtors method and debtors method that head office prepares books for branch and hence head office maintains a branch account. In a similar fashion, in independent branch prepares its own books of accounts and hence it maintains an account called head office account. It maintains an account called head office account. Head office prepares a branch account and branch prepares a head office account. Both are two different accounts. For the head office, remember guys, for the head office, the branch is like a debtor. The branch is like a debtor. So branch account will generally have a debit balance because for the head office, branch account has to pay the head office. So for the head office, branch account is like a receivable account. However, for the branch, the head office account is like a creditor account. It's like a creditor account. Because the branch has to pay to the head office. So it takes nature of a creditor account, and generally head office account will always have a credit balance, not always generally. Therefore, this branch account prepared in the head office books is a mirror account of the head office account prepared in the branch books. Therefore, all the transactions I record here should match with all my transactions in the head office books. In depth about how to ensure they match, we will see in the third part of the accounting. Now coming back to the first part, accounting in the books of branch. The branch will prepare its own trial balance, branch trial balance, where it will list down particulars, all debit balances and credit balances, assets, liabilities, income, expense, all the items will be in the trial balance. However, financial statements are not prepared at the branch level, hence all these individual accounts have to be closed. How do I close them? Let us take an asset. Asset has a debit balance, let's say 100. How do I close this account? I can close asset account by crediting the asset account. So I will credit my asset account. I will credit my asset account. What to debit? I will debit the head office account. So the entry will be for all debit balance items in my trial balance, assets, expenses and all of that, entry will be head office account debit to assets account. So I will post all my items in one single account. This is the process of packing and loading into the truck. This is my truck. Head office account is my truck. So I will close my entire trial balance and plot them in my head office account. That is the first step. How do I close a liability? If it's a liability, let's say creditor, you have to first debit it to close the account. So what I will credit? I will credit the head office account. So in head office account, I will write by creditor XXX. So I will plot all assets, liabilities, income and expense in one single account, and the account will close. There will be a difference of balance, that will be the amount payable to the head office. Let's say the difference of both sides comes to 200 or 300. That will be the credit balance, closing balance in head office account, which is payable to my head office. But my branch trial balance will also have head office account, which will have generally a credit balance. When I close and post it here, the account will automatically tally. So this is my truck, which I send it to the head office. Now let's see how the head office in part 2 unloads all these accounts and prepares financial statements for the branch. In the previous section, we had seen what happens at the branch level. Now let us see what happens at the head office level. At the head office, branch will send a HO account having details of all assets and liabilities plotted in my account. Now I will start reversing these entries to simultaneously prepare my financial statements. What I will do, I have a branch account at the head office. So what I will do is, I will prepare my trading and P&L account and the balance sheet for the branch. Let us take a few sample entries. Let's say there is asset over here for 100. Now, how to bring this from the HO account into my branch account at the head office? Now, I have an asset here with a debit balance. So I will create a new account for my asset because everything is into one account. I need to take it out. So I am creating an asset now. Asset account debit 100. I will immediately go to my balance sheet and plot asset for the branch is 100. What to credit? I will obviously credit my branch account with 100. I will come to my branch account and post buy assets 100. We will do this entry individually for each asset. Let's say there is sales over here which is 200. How did I close the sales account? I debited sales and credited head office account at the branch. Now I have to create sales entry in my head office books. So what I will do, I will credit sales to the extent of 200. Immediately I will go to my trading P&L account and post sales for 200. Credited sales. What to debit? I will debit the branch account in the head office for 200. Come to my branch account and post 2 sales 200. In this fashion, I will unload from my vehicle HO account item by item into my books by accounting in my branch account and simultaneously posting all the items in trading P&L and balance sheet. The minute we do it for all the accounts which are inside the HO account, you will get your gross profit, net profit, and balance sheet will tally because this account is already tallied. So this is what happens in an independent branch where you prepare trading P&L, balance sheet, and branch account at the level of head office. This is what the head office does, and this is what we call unloading of items at the head office level. Now let us go and see what is the third part in accounting for independent branches. In the previous section, we had seen what accounting happens at the branch level and what accounting happens at the head office level in case of an independent branch. Now let us see what are third part. This is the most important part, and in every sum you have to check for this the very first thing. You have to check this first. We have two accounts, HO account and branch account. Every question will give you details of the balances of HO account and branch account. What you have to check is if these balances, meaning HO account is maintained at the branch and branch account is maintained at the head office. The very first thing you have to do in every sum is check if the totals of both these accounts match. If they do not match, you have to make some adjustments to see why they are not matching and pass those necessary journal entries. Why should they match? Basically, for the branch, HO account represents how much I have to pay to the head office, and at the head office, branch account represents what they will receive from the branch. If one place payable is 100 and other place receivable is 120, there are some entries which some of the parties have forgotten to account. So we have to make those adjustments. What are these common entries which are mostly seen? Now, those items which are moving from the HO to branch is one side. Those items which are moving from the branch to HO is on the other side. Generally, what moves from HO to branch, head office to branch? Goods. Now, head office has already sent the goods, but branch has not received. So either HO would have accounted for it, but branch would have not accounted. Therefore, always account for the recipient branch or head office. Whoever is receiving the goods or item. Head office is sending goods to branch. Therefore, head office would have already accounted for this. Branch has to account for this. Now, in the books of recipient, in this case, in the books of branch, what entry should they pass? I am receiving goods. Therefore, I will debit my goods. But these goods are still in transit. Therefore, my entry will be goods in transit. Account debit. Credit what? I will credit the HO account which is maintained at the branch. This will be the entry for goods in transit. This will be a common adjustment in your sum. Next, what are the general items which move from branch to head office? For example, cash remittance from branch to head office. Branch might have accounted for this, but head office will account only after they receive it. This might be a reason for difference between both the accounts. So, in HO books, I will pass an entry. Cash in transit, I am receiving cash. Cash in transit account debit to branch account. This will be another common adjustment in your sums. Are these going to be the only adjustments to reconcile both the accounts? No. Each sum will have some specific cases which you have to identify and pass an entry. But these are few of the common adjustments you will see in most sums. So start your sum here. Check if the balance is tally. If they don't, make them tally. See what adjustment entries to pass. And then go ahead and account either in the books of branch or head office based on what the question requires. Most of the sums will be part 2, accounting in the books of head office, where you have to prepare the trading and P&L and balance sheet for the branch and find out the profit. So this is about independent branches. Next, let us see what is a foreign branch and how to account for the same. In the previous section, we had discussed exhaustively how to account for an independent branch. Now let us see what is a foreign branch. Foreign branch is a branch. For example, say your company is operating in India. Any branch which is located outside India is a foreign branch. To put it in other words, where the financial statements or transactions in that branch happens in a different currency other than the home currency. Now, in AS11, we have also seen that there are two types of foreign operations: integral foreign operations and non-integral foreign operations. To summarize, what is an integral foreign operation? It is a foreign operation where money earned in that foreign area is continuously remitted back to the head office, to the holding company, and money is not kept over there. In non-integral foreign operation, money earned over there is used for expansion in the local country and money is not sent back to the head office. Now, between the two, which affects my financial statements because of foreign exchange movements? Only integral foreign operations, because they continuously keep remitting money to head office, and foreign exchange affects the consolidation process. However, in case of a non-integral foreign branch, they do not send money to the head office and hence foreign exchange impact is not there. Now, most of your sums will be only in integral foreign operations and how to translate for this. This is exactly like an independent branch. Only one extra step is converting your foreign currency to rupee. What rate should I use? So, during the year, I can either take the opening rate or the closing rate or the average rate. So we have to see for items how to convert them and what rate to take. So your foreign branch will have only one extra step. Convert the trial balance in foreign currency to Indian currency, and after that prepare schedule 3 profit and loss account and balance sheet. And hence this is an easy chapter, easy segment in branch accounting and scoring area. All you need to do is remember what rate to take and understand the concept behind this. Opening stock, what rate will you take? Opening rate, closing or average belongs to beginning of the year values. Hence I will take the opening exchange rate. For all nominal account transactions, income, expense, trading P&L, income, expense, for all of that, they happen throughout the year. So I cannot take an opening or closing rate. I will take average rate. For all other monetary items like trade receivables, cash, which are realizable in fixed amounts, since those amounts are realizable in exactly what is there in the book value on 31st March, we will take closing rate. Coming to non-monetary items, coming to closing stock, what rate to take? The standard says if closing stock is valued at NRV, net realizable value, then you take closing rate. If closing stock is valued at cost, then you have to take actual rate. Now what does this mean? Closing stock is always valued at lower of cost or NRV. NRV is computed on 31st March, hence I am taking closing rate. If closing stock is valued at cost, then what is happening is, I know if it's valued at cost, what date the stock was purchased, so I will take the actual rate. However, if question is silent regarding this, please take only closing rate for conversion of closing stock. For fixed assets, asset could have been purchased in 2005, 10 years, 15 years back, and hence take the specific rate which was available at the time of purchase. Let's say now we are in 2020. Let's say asset was purchased in 2005. You have to take the rate which was applicable in 2005. Why? Because if you take the rate in 2020, then the fixed asset, because let's say in 2005 exchange rate $1 was 40. Now it is 75. Just because of exchange rate conversion, your fixed asset value will artificially increase and you will provide a higher rate of depreciation. And for the same reason, for depreciation also you have to take the same rate which you have taken for that fixed assets. Lastly, other ledgers with corresponding balances, meaning HO account has a mirror account which is branch account or goods sent to branch GSB account. For all this, there is no conversion. Let's say the first thing we do is match both the accounts. So I tally them. So one will be in dollars, one will be in rupees. I am tallying the number of transactions. So no rate to be taken. If you have one in dollars, take the equivalent rupee value. Therefore, no exchange rate. Just take the, if this is in foreign currency, then take the one which is in rupees. Just take the other value. So this is about foreign branches. Again, first step to do in foreign branch sum, they will give you a trial balance of the foreign branch which is in foreign currency. Use these rate and convert them to rupees. Second step, you will have a trial balance which is in rupees. After that, all you have to do is prepare trading, P&L account and balance sheet and tally your branch accounts. This is about foreign branches. Thank you.